Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that.
All right, folks, here we are on Thursday, April 3rd. We're going to take a look at SPY, QQQ, Apple, Tesla, and NVIDIA today. Basically get a sense of the market. What I specifically want to talk about is where folks, I think, are likely to get trapped when they think about buying the dip, or these posts that I see about like, now is the chance to build generational wealth by getting NVIDIA at 30% off, or something like this. There are a lot of traps out there. I thought I would point out how I think that would look, and then also give my 2 cents on where I actually think some good dip buy opportunities might come into play based on the charts. So let's jump right in. Today, Dow down almost 4%, S&P almost 5%, NASDAQ almost 6%. So we didn't even get a limit down today, so nothing to worry about. VIX, let's briefly touch on this. I've said this before in a video, but I wanted to reiterate it now. When the VIX gets in the high 20s, but specifically when it gets like 30 to 35, I do think if you are getting in and out of positions, swing positions or what have you, you may want to be cautious about being overly short on the market when the VIX is near 30 to 35, which it would be right now. Oftentimes, that's a topping out point. It's a point at which there is then a bit of a pullback in the VIX. Now, of course, can this go bonkers and get exponentially higher? Sure. It's really infrequent when that happens. I mean, even this big run here is up to 23. I'm just going to look back here at what happened in 2020, early on in 2020. Yeah, I mean, that's if you get a news cycle like we had when everyone thought the world was going to completely fall apart. Yes, you can certainly get runs into the 80s. So don't take this as me saying like it can't go higher than 35. Of course it can. I would just say if everything else is relatively on par, right? If the news has already been spoken, right? The news is already out there, and there's not additional compelling factors. 30 to 35, you may want to think about letting the VIX breathe a little bit, which should account for SPY, QQQ, and most likely these other tickers getting a bit of a reprieve and moving back up a little bit. However, let's just talk about the tariff situation. If you get a spike because of the tariff announcement, let's pretend that's here, and then you get a couple days of a lull, and then a whole slew of tariffs come back at the US. So essentially confirming tariff war, right? That it's just this nonstop, okay, you give us plus 10, we give you plus 20. Oh, you gave us plus 20, we're going to give you plus 50. And just this nonstop escalation of tensions and endlessly inflating the prices of products, then yeah, I think that something like that could account for huge spike, huge rise. So you need to know what to look for. And just realize that could blow this out of the water. But that's why I say all things equal. Just know, if there isn't additional crazy house news, this 30 zone, 30 to 35, might be a good point at which to lock in short side profit and wait for an entry back around 20 or even in the teens. Okay, so that said, here's how I think folks are going to get tricked if we get a pump. First of all, you have to realize that there's now this gap, right? So if this gap gets filled, which could happen relatively quickly, it would fill this gap at 567.42. So just call it 567.50. Don't get too far ahead of yourself if you see it coming up and approaching, say, 570, right? It may just be filling this gap and then carry on its merry way back down. So that's not to say you can't play the gap fill, but just say once it has filled the gap, I would be very cautious of what's happening once that's complete. And you can go ahead and look for yourself at these levels. I'm not just going to bore people by calling out levels that you can just easily go hover over a candle. And what you want to do is just see what the low of yesterday's candle was. What was the low of Wednesday's candle? That's the gap fill. Okay. So that's a very obvious way that I think folks are likely to be trapped. And we could see that come, like I said, relatively quickly. That could be what brings the VIX back down. Again, if the war escalates or there is additional geopolitical whatever tensions that arise just elsewhere, saber rattling of Canada, toward Canada, toward Greenland, toward Iran, any of these things that could set off additional surges, throw that 30 to 35 out the window. But if it is just a gap fill, I could see that happening. So aside from the gap fill, what I would suggest, what I do, which is why I would suggest it, is putting any of these EMAs on your chart. This is the 183, that's the long term. This white one is the 8. This peach colored one is the 21. And this red is the 34. What I would look for is approaches to these EMAs and then seeing what it does when it gets there. So if it's approaching an EMA, you may want to play the approach to the EMA, right? If you're a short term, get in, get out. But then realize when it hits the EMA, it very well may reject. And that may be the point at which folks get trapped, right? See it moving up, they see it making a nice motion, right? This would have been a very obvious spot. Broke through the 183 and it rejected off the 34. And that's where you're bound to get trapped. So to me, I like these because they move. They're dynamic. So these levels move with the price action, and I can keep an eye on them that way. You don't have to have 4 on the chart. I do that because I'm used to it. You may find it much, much simpler to just go ahead with the nearest in EMA. So you could just put the 8. If it gets some action above the 8, you could throw on the 21, take the 8 off, right? And just work your way up that way. It will be all important when it does get to the 183, but that may be quite some time from now. just realize that. As these short-term EMAs, the 8, 21, 34 get dragged below the 183, which QQQ, it's happened as of today. Apple, it's about to happen. Tesla has already happened. NVDA has already happened. But as that happens, I then consider that to be a bear market. And until there's significant push through on those levels, I consider it to be the trend is my friend. We're in a bear trend. Consider that to be sort of the dominant one. Are there a few pushes, a few bullish runs in the midst of a bear trend? Yeah, of course. Just like in the long-term bull trend that we've had forever in SPY, there's a few periods like we're in right now where things flip. But how often do you see these short-term EMAs get dragged through? Didn't happen here, just the 8 made it through. Didn't happen here, that 34 stayed above. It happened here, right? It happened back here. And that's when it took it from a bit over 400 down to 336, right? It's a pretty big percentage loss. Happened back here, right? So it does happen, but I mean, it is few and far between. So that's sort of what we're looking for at the moment, but that would be my suggestion to not get trapped. Think of these pushes, these bullish runs, as most likely impermanent or temporary until the trend changes. And then you can think of pullbacks as temporary. But if you're in a bear trend, I would follow the EMA. That's my plan. Now, let's take the EMAs off. I'm going to put levels on. And I do want to talk about levels of which I do think if we continue to dip and drip and bleed, what some actual dip buying opportunities might look like. So in SPY, I'm looking here from about, say, 515 or so down to 590-ish, right? You can see the actual numbers there. And if it gets through there, something like 442 down to about 410, 408. So those are areas that I would look for in SPY. It's not just saying that it has to reverse through there, but if we do throw on, I'm only do this briefly because it gets pretty cluttered. Just keep in mind, I'm looking at the weekly now. We were previously looking at the daily, but that was my best way to get in these levels and make them clear and visible. The 183 is now situated, right? Per the 183, on the weekly chart, still in a bull market, right? It does not happen often. Do we have any examples here? Okay, yeah, way back here. This was the housing economic crisis of 2008. That's when that happened. Dropped her all the way down to 51. Right, that was with the subprime mortgage debacle. It's a euphemistic way to put it. But so that's the only other time that these EMAs have been drawn down. So I mean, if that happens, things are really, really in a rough spot. That was a tremendous crisis if you want to go back and look at it. But here, the 183 on the weekly is situated between these levels right now. So if it did come down into these levels, the 183 may also be there. So you can just see how it reacts off of that, right? That might be additional confirmation of either that area is going to hold as a buy zone, and maybe that is your generational buying opportunity. Or it's confirmation that it's lost the 183 and you better just watch out because things could get really, really dicey. But those are the levels that I look at for SPY. QQQ, to just literally call out numbers here, I would put around 443 down to 413, and then a secondary zone 373 or so down to 344. I know I'm being a little bit inexact, but it is hard to do this with the way that Webull has it. And you can always just pause the video and see where exactly these levels are. But I mean, it's a range, right? So it's a zone. I don't think you have to be too crazy about the exact. And also when the stock gets into these levels, we'll see it. So that's the other thing. It's it'll be apparent when it's in there. So 193 down to 180 on Apple, and 163 down to 131. Tesla definitely looks different. I know I didn't want to get rid of these because they're important, but they look crazy here on the weekly. 214 down to 183, 184. And then secondary 149 down to 107. Lastly, NVIDIA 97 down to 88. Secondary, things are really thin through here, FYI. I don't know if it does lose that 88 area. Ooh, could get rough. 49 down to about 41. All right. The other thing that we could quickly look at, we're here anyway, for the month of April. The SPY candle now, we had a 1 candle trigger and a fire, so it may not mean much of anything, but it is below the put trigger. Put trigger for April is at 551.71. It has a -1 ATR down to 526.83. 526.83 on the daily puts it just below this level here, right? Getting this level here is, like we said, about 517 or so. So it gets it mighty close to there. Will it fill that full -1? I don't know. But just to mention it, if it does swing back, the call trigger is at 567 with a +1 all the way up to 591. So you could also take a look in that setup and see where these levels are. Tesla is sort of the one that's looking a little bit different at the moment. I had mentioned in yesterday's video, it's kind of counteracting the market in some ways. It's following it in some ways, but then is working a little contrary to it in others. I mean, this clearly looks different than SPY, right? In a normal environment, this would look to me like it would have all of the earmarks just on the look here of having the ability to push through this call trigger. But if it does, it has a +1 ATR up to 331. If it loses it and gets below the put trigger, which is at 242.19, it has a -1 ATR down to 187. And that would win my bet that Tesla sees 200 before it sees 400 again. But I don't know. Like I said, it has been holding up better than the indices, just in a structural look of things. Not necessarily. I know that SPY was down 4 and Tesla was down 5.5 today, right? So not in that sense, but in the sense of the look of this formation versus the look of this formation. yeah, I would take this one any day of the week, minus what these arrows are pointing to, which are these shooting star candles, which previously have proved to not be great for Tesla bulls. All right, folks. Well, I hope that your trading week is going well. That may be a weird thing to say at this point, but who knows? In any case, I appreciate you watching, and I will see you in the next video.